Assalamu alaikum. Assalamu alaikum. Can you hear me?
Walaikum salam wa rahmatullahi. Yes, yes.
Let's just give it 2 minutes, inshallah, for a few others to join if they're joining, and then we'll begin. Yeah.
Okay, no problem. Shukran nila.
All right. We'll begin there, inshallah, and I'll put the recording later on for anybody else who wants to join. So I'll be sharing my screen now. Both of you can hear me, right? With Abdullah and Sister Zakira.
Yes. Clear. It's clear.
All right. Okay. Let me share my screen. Okay. Can you see my screen?
Yes, yes.
Yes.
You can see my screen, right? All right. Okay. So, so the topic that we'll be covering today in today's tutorial is the inventories chapter, right? So we'll be going through how we account for inventories, right? And what are the different methods, and then we'll do a couple of questions on the topic in order to make it clear how it works. We have two methods, right? The first one, the two main systems. The first system is the perpetual inventory system, and the second one is the periodic inventory system. So the perpetual inventory system is more, takes more time, you can say. So it focuses on accounting for the inventory as the company purchases it, and then as the company sells it, like it tries to account for the inventory at each level. So it's more detailed. Whereas the periodic inventory system, it just takes a whole period, right? And then it overall calculates, how much inventory was sold, and so on and so forth. Inshallah, we'll go through it in order to make it more clear. When is often used. The first one is the specific identification method. This is usually used quite rarely because specific identification method is the most accurate, but it means you have to make sure that like the selling, the cost of every single item is looked at separately. And so each item, let's say they have 10 cars and they bought the 10 cars at 10 different prices. Each one, the cost is noted down, and each and the selling price is noted. So it's very, very detailed, but it's very time consuming. So it's usually not used. The second one is the FIFO method, which is the first in, first out. The inventory that you purchased, that is the first one that is sold as well in accounting. Once again, we will go through it. I think you guys already understand the general idea of what is first in, first out, what is last in, last out. Yeah, and last in, last out is the opposite, right? So the inventory that is bought last, that is the one that is sold first. So that means whatever is usually remaining in the inventory is the one that is bought earliest. This is very rarely used, but this is another method, right? Okay, it's last in, first out, right? Last in, first out. And then lastly, we have the weighted average cost method. And in this method, the inventory that is remaining in your stocks are averaged. The costs are averaged, and that is used to account for the inventory. Okay, so those are the methods under the perpetual inventory system. The methods under the periodic inventory system. So for the periodic inventory, there's one thing very important that is used, that is the inventory equation. So the inventory equation states that the beginning inventory plus whatever plus purchases minus ending inventory in a set period. Let's say we're talking about a month, the month of March. So the beginning inventory plus purchases in March minus ending inventory at the end of March equals to the cost of goods sold. So this equation is used when accounting for inventory, whether we're using the first in, first out method, whether we're using the last in, first out method, or whether we're using the weighted average cost method. So that's just a quick rundown on the types of inventory systems and the methods. And now we'll do a question. We'll do a question to try to make it clear. With regards to what I've spoken about so far, is there any questions? Any question with regards to what I've explained so far, or shall we move on to the examples?
We can proceed to the example.
All right. Okay. So the first question that we'll be doing is this question. So I've uploaded this to Google Classroom. Actually, I've uploaded this to Google Classroom, and you can see the folder. So this is the question. So yeah, okay. So this is the format that is generally used. I've made this format here so it's easy even for you guys if you want to do it in Excel. It's easy to just copy paste it and do it, right? So all right. So let's look at question 2. So Seri Sinar company specializes in printing equipment. Because each inventory item is expensive, the company uses a perpetual inventory system. Company records indicate that the following data are for line of printer model number IJP-048. And so this is the record. This is the record for the entire month, and now we have to go through it and account for the inventory. So now let's look at what's required. So A, compute the amount assigned to the ending inventory and the ending inventory and the cost of goods sold for the month of March using each of the three methods. Each of the methods for FIFO, LIFO, and weighted average. So let's do this, right? Okay. All right. So first of all, let's just copy this. So we have part A, FIFO. Let's say part A, FIFO method. All right. So okay, this is the okay. All right. Okay. So we'd have to go through each of this and complete the table. Eventually, we'll get the ending inventory and the cost of goods sold. Ending inventory is this. Basically, the balance is the ending inventory, right? So then we have date. We have 1st March, right? 1st March, and then we have 5. There is no goods purchased. There is no goods sold, right? So the balance would be 5. Into 800. I mean, 800 would be 4,000, right? Yeah, okay. 500 would be 4,000. So that is the
Hey, guy, let me call you after.
value. That is the value. This is the beginning inventory value for the month of March, right? 9 March, right? 9 March, we have a good of 15. Assalamu alaikum. Sorry, can you hear me? I had an issue with my connection.
Yes, we can hear you.
All right. Okay.
Bro, I think the connection here too is poor. Yes, sir.
You can hear me, right?
Yes.
Okay. All right. So let's continue, right? So we have in 9th March, we have a purchase of 15 printers for the unit cost of 820. So that is 12,300. So at 9th March, the ending balance is the sum of this, right? So we'll keep it as that. Now we have a sale on 12 March. On 12 March, we have a sale of 8 into. We have a sale of 8 printers. Now we need to know how this would be accounted for. So because this is we're using first in, first out, first we have to sell the 5 printers that were there at the beginning. So the cost of that would be 5 into 800, which will be 4,000. And then the remaining 3 that we sold will be accounted for using the other cost, 820. So this would be 20 into 3 would be 2,460, right? So now the ending balance would be this. The 5 are used up already. 3 is used up from here, so it would be 12 into 820, which would be 12 into 820, which would be 9,840. Everybody got this so far? Like what I did so far? Do you guys understand?
Yeah.
You understood, right? See, if there's anything unclear, please let me know. Yeah, I'll stop back in. I'll stop back in. Answer.
I didn't understand.
Okay, that's great. Okay, then we have 20 March. 20th March, we have another purchase. This time, this is a purchase of 6 into 890. That would be 6 into 890. Would be 5,350, right? That's another purchase. Now here the ending balance would be we just add that to the 6 into 890, which should be 5,340. So at the ending balance at 28th March is 9,000. Is the sum of these is the sum of these two. Then lastly we have a sale at 28th March, right? This is a sale of 7 into yeah, okay. So okay, now that I covered, right? And one of you now say how should the this sale be accounted for? So we have sold, now we have to sell. So we have sold 7 printers on 28th March. How would the accounting be done here? Can one of you answer? Kanata, you wanna try?
No, brother, I didn't understand what happened in the past transaction.
Okay, so
I think I have confused.
all right. So what happens here is now we are selling 7. We're selling 7 printers. So currently in the inventory we have 12 inventory. We have 12 printers at 800 at a cost of 820. These were there from before, and then recently the purchase one was 6 printers at 890. So the first in first out system means you always get rid of the earlier printers first. Get rid of the earlier purchase printers. So when we are accounting for so with the 7 that we will sell will be 7 that we bought earlier. So we will cost it for 7 into 820, which would be 7 into 820, which would be 5,740, right? And so the ending inventory now, because we have used 7 of the 12 remaining from the 820 ringgit printer. So how many? Okay, now what would be the ending inventory here? We had 12 before. Now we use up 7 of it. So how much will we have here?
5.
5, right?
Yeah, we'll have 5. Okay, 5 into 820. And then we have, of course, these 6 we had not touched it before because all the 7 that we sold were covered from the earlier inventory. So 6 into 890. What is 5 into 820? It's 4,100, right?
Yes, 4,100.
Okay. So the final ending inventory, is these two here, which is this is the final ending inventory. Did you guys got understood how I did this?
Yes, Alhamdulillah.
Is that clear, right? Okay. And then for the cost of goods, they also want to know the cost of goods. So cost of goods would be the sum of everything above. So it would be the sum of this. So this is the cost of. All right. So this is now we have answered the question in terms of the FIFO, in terms of the FIFO method, right? That's clear for everyone, right? Sister
Yes, sir.
Nurul, is that clear?
Yes, bro.
All right.
Sorry, I'm not clear. Can you explain again?
All right. So what was unclear in my explanation? Like in this, what is it that you don't get here?
For cost of goods sold,
Which?
starting from 12 March.
You're a bit unclear. Can you type it? If it's, because I'm not understanding what you're saying.
I don't understand how for cost of goods sold.
You don't understand how the cost of goods is 12,200?
From 12 March, 5 times 800 and 5 times 800.
Can you type, because I don't know, your voice is very unclear for some reason. Okay. Okay. So what? Okay. So if your question is how cost of goods is done, all right. So you have to put yourself into, let's say you put yourself into the shoes of the person, right? So at the 1st of March, they had 5 printers valued at 800 ringgit each, right? And so this was the balance. At 9th of March, right? They had the same. At 9th of March, they had the same 5 printers that was at the beginning, right? So this was there. They purchased a further 15. So they purchased 15 at 820 ringgit each. So, right. So now they have 5 printers. They have 5 printers in their stock. They have 5 printers at 800 ringgit. The first, which is purchased before. And now they have the newly purchased one. They have purchased 15 new at 820. So this is what they have at 9th March. So at 12th March, when they have made a sale of 8 printers, right? With first in, first out, first they have to get rid of the older. First, they have to get rid of the older inventory. So first, they sell the 5 printers that were bought at 800 ringgit. So that is the cost. So from the 8 printers that they sold, 5 of those were sold from the beginning inventory. You know, the older printers. So those 5 were sold, right? And then the remaining 3, because they have sold 8 in total, right? The remaining 3 they sold from the next batch, the second batch of 15 printers. So the cost of goods was 5 into 800, because that was cleared out, and the remaining 3 was sold with the cost of 820. And so that's how we got the cost of goods here, right? And then, of course, what is remaining? These 5 have already been sold, right? So that's no longer there. But this one, from the 15, we sold 3 of it. So 12 is remaining. So this is the remaining is 12 into 820. Is that clear?
Okay, clear.
All right. So the same thing is done over here. So over here, coming into 28th March, right? The company had 12. The older batch was 12 printers at 820 and 6 printers at 890. Now, because we're using first in, first out, when we sell 7 printers, we want to sell off the old printers first. So we sold off all the 7 printers from the old batch, from this batch, right? And so that was sold, as we got the cost of goods here. And then, of course, we have the final remaining inventory. So it is a bit repetitive, but that's how first in, first out works. Now, the second question is part B, right? So part B is LIFO. LIFO method is completely the opposite. So let's just copy this and then let's make changes, because that's easy there. So the LIFO method is completely the opposite. LIFO method is you get rid of the newer inventory and bull inventory, right? So let's see how that changes. So like the FIFO one, in the 1st of March, the inventory balance is 5 and 800. That does not change, right? Now, okay. Now in the 9th March, we bought 15 into 820. Once again, this is just being accounted for in the balance, so that also remains the same. Now in 12th March, we have sold 8 printers. So here there will be a difference in terms of the accounting. So now the 8 printers, because we want to get rid of the new printers first, it's last in, first out. It's the opposite of the part 8 that we did. So all of the 8 that we sold will be sold from this batch, from the new batch. So it will be 8 into 820, which would be how much? 820, 8 into 820, which would be 6,000. 6,560. And now the ending balance, this will still be there because we did not sell from that. This batch will have reduced. It was 15, we sold 8, so there'll be 7 remaining, right? 7 into 820. How much is that? 7 into 820, which is 5,740. So that is the how the, so because LIFO, you have to get rid of the new printers first. That's what happened, right? And then on 20th March, we made a purchase of 6 printers at 890. That is once again that. Let me divide this a bit so it's a bit more clear. Okay, wait. All right. Okay. All right. So on 20th March, on 20th March, we bought 6 additional printers at 690. So we simply have to add this here, right? So now going into 28th March, these 3 printers are remaining, right? So we have what was remaining on 12th March, which is these 2, and then we have what we bought on 28th March, right? So on 28th March, we sell 7 printers, right? So now these 7 printers, these are the printers. This is the oldest batch, the second oldest batch, and the third batch. We have bought printers 3 different times, right? So because we want to get rid of the latest printers first, so 6 of these will be from the newest batch, which is the 890 batch, and one of it will be from the 820 batch, right? So 6 into 890 is 40, and this is 820, right? So now, and then what is remaining? What is remaining? This will remain, okay? This will remain as it is. 1 second. Yeah, this will remain as it is. For the 820 batch, we have sold 1. So it'll be 6 into 820, which is 4,920, right? 4,920, and there's no printers remaining from the 890 batch. So this would be the ending inventory for the month of March using the LIFO method, and the cost of goods would be the sum of 24. Be the sum of this. Yeah, did you guys get that? How the LIFO was different from FIFO?
Yeah. Alhamdulillah. Yes.
Was it clear? Was it clear for you, Sister Zakina?
No, it's clear.
All right. So that's the difference between FIFO and LIFO. In FIFO, you have to get rid of the older inventory first. In LIFO, you have to get rid of the newer inventory first and then move on. So in that way. So that's how that's the difference between these two, between FIFO and LIFO, right? So that's pretty straightforward, right? Now we have the third one we have is the weighted average cost method. So this is a short form. Let me use this way. So we go through a similar method here, right? So we have 1st March. The balance would be the same as this. Okay, all right. And then on 9th March, on 9th March, we have this purchase, which it will remain the same here, right? And then the differences between each method occurs really only for when you sell an item, how you need to account it for. When you're buying, purchasing, it's the same entry for each method, right? So now we have on 12th March, right? On 12th March, we sell. Oh, sorry, wait, this is a small mistake. No, this is a mistake. Yeah, wait. Well, weighted average cost is a bit different, right? So yeah, this won't be the balance here. The balance for weighted average cost will so for weighted average cost, we need to find the average cost per unit. So on 9th March, we have 5 printers which have been quoted cost 800, and we have 15 printers which cost 820, right? So the total cost for them, right, is 4,000 and 12,300, right? So to find the average cost for all 20, there are 20 printers here. 5 of them have been bought for 800, 15 of them have been bought for 820. We need to find the average cost for all 20. So to find the average cost, we take the total cost, which is 16,300, divided by 20. And the total cost and the average cost per printer for these two is 815. So we take 4,000 plus 16,300 divided by the total printer, the total amount of printers. So and and so the ending inventory for at 9th March is 20 into 815, which would be 20 into 815, which would be 16,300. Yeah, which should be 16,300, right? So that is the balance at the end of at the end of March, right? Now we have Now we have the sales on 12th March, right? So then over here in 12th March, we sold items for we sold 8 this ones. So we sell it. We have to cost it at the average cost, which is 8 into 815, which is 6,520, right? And so what is remaining? 12 will remain, right? From the 12 into 815, which would equal 9,780. Was that clear? Do you guys get that? How the weighted average cost works?
Yes.
So each time there is a purchase, right? And you have bought something at a different price, you need to average out the cost between all the remaining inventory. So when we bought it at 9, so over here, we were costing the printers at 800. Then we bought printers at 820 ringgit. So now we have to average between the two. So we got a cost of 815, right? And then when we sold, we cost it at that moment, if you make any sales, we cost it at 850. Now, and the 20th March, we bought 6 into 890. 6 into 890 is 5,340. All right. Okay. Now can anyone tell me what should be the average unit cost here? Now currently we have 12 printers at 815 ringgit, and we have 6 printers at 890 ringgit. How should we average? How should we find the average cost? Anyone? How should we find the average cost over here? I just did it over here. We have to take the total cost divided by the total number of printers. So what will it be? We have 12 printers at 815, and we have 6 printers at 890. How do we take the average over here? You guys understood, right? What I did before. So can one of you solve it?
Divide the amount to the quantity.
Okay, so what is the total amount? What is the total cost?
9,780.
That's only for these 12. What about these 6? So it needs to be 9,780. See, 9,780 plus 5,340. This is the total cost divided by 12 plus 6. 12 because there were 12 printers. We bought 6 more printers. So divided by 18. This is the average cost for the whole 18 remaining 18 printers we have in stock. We price it at 840. So we take 18 into 840. That would be 18 into 840. There will be 15,120. You understood that? You guys got that?
Yes.
All right. Okay. And then on 28th March, we make a sale. We make a sale of 7. So this, okay. What should I enter here? 7 into how much?
840.
Yeah, 840. How much is that? That is 7 into 840, which is 5,880, right? Okay. So, okay, how many, okay, we had 18 printers before, we sold 7. How many do we have remaining? What should go into this? 11 into
11.
840.
840. Yes. 11 into 840, which is into 11, which is 9,240. Okay. Yeah. So this is the ending inventory. The ending inventory. Let me just yeah. Ending inventory is 9,240. The cost of goods sold is this value. Is that clear? You guys understood that?
Yeah.
Yes, yeah.
All right. Okay. Just give me one moment. Yeah. Give me 2 minutes. I'll be back. All right. Yeah. Okay. Can you see my screen?
Yes.
All right. I can see my screen. All right. Okay. So we have done part A. Okay, and now we have part B and C to do. So part B is very very simple. Okay. What we do is we have to compute the gross profit of the company for each for using each method. So let's just list out. We have the FIFO, we have LIFO, and then we have the WAC method, right? So first we have sales. Yeah, we have sales. So the total sales. Yeah, the sales in the month of March, right? Sales we have sold twice. We have sold 8 printers for 1,200. We have sold 7 printers for 1,450. So we have 8 into 1,200 plus 7 into 1,450. That is the sales for the month of March. The sales will remain the same for each. Like there's no difference in the sales, right? So sales will remain the same for each. We just have to simply multiply the total sales, right? Now we have the cost of goods sold. This is what will change. So we've already calculated the cost of goods. For FIFO, the cost of goods is 12,200, right? And then for LIFO, the cost of goods is 12,720. And for WAC, the cost of goods is 12,400. So the profit is the sales minus the cost of goods, right? Yeah. Okay, you guys understood that? You understood how that was done? You just take the sales and then because we've already done the hard work, you just subtract the cost of goods sold out of it to get the profit. Right? Okay, that's clear, right? Is that clear?
Yes.
All right. Okay. And then lastly, yeah. You said something?
Oh, I was trying to say yes.
Okay. All right. So that is part B done, right? And then we have part C, which is at the end of March, due to the release of a new printer model, all all IJP all printers have a net realizable value of 850 ringgit each. Prepare the adjusting entries to record the above transaction if the company is using FIFO method of inventory. All right. So in the FIFO method of inventory, this is our ending inventory. We had well, let's just put the ending inventory FIFO. All right. We had five printers at, oh sorry, not that's LIFO. This one. We had printers at 820 ringgit, right? And we had 6 printers at 890 ringgit, right? So the rule that we need to use here is that we will account for whatever is lower between the cost and the net realizable value, right? So if for these 5 printers that we have here, the cost is 820, the net realizable value is 850. So we will use 820 because that is the lower of the two. If you have to look at the cost, the historical cost, you have to look at the cost, and you have to look at the net realizable value. Whatever is lower, you will use that into accounting. You will use that for accounting it. So for these 5 printers, the cost is 820, the net realizable value is 850. We will add 820. We will add 820 to calculate the value of these 5 in the ending inventory. For the other 6, the cost is 890 and the net realizable value is 850. So here we have to use the lower of the two. So here we use 850, right? Therefore, this would become the total click on this. All right. We're going to all right. So okay. So this is the this is the FIFO entry, it is 9,440. And once we adjust it for the ending, once we adjust it for the net realizable value of 850 ringgit, this is our ending inventory. This is our ending inventory value. So there's a decrease of 240, right? So there's a decrease equals the original FIFO inventory minus that. Oh, sorry, minus that. So it'll be 240. So what we would do here is, because the inventory has decreased by 240, you would credit inventory yeah, you would credit inventory and you would debit cost of goods sold. You guys, do you guys understand that? Hello, was it clear?
Yes.
That was clear to the others as well, right? So you had the original FIFO inventory ending. So we had to adjust for the net realizable value. For the cost that is below the 850 net realizable value, you use the cost itself. But if the cost is higher than the net realizable value, then you use the net realizable value to calculate the value of the ending inventory. And then, because here the ending inventory decreases, right? The value of the inventory decreases, so we have to credit inventory and you have to debit cost of goods sold. This is the adjusting entry. So yeah, so in that way we have answered this full question. That was clear. That was clear to everyone, right? The whole question. There's one more question that we can that I wanted to do. It's a bit, yeah, I wanted to do, and before ending the class, just to make it clear. That's is that all understood?
Yes.
All right. Okay. So now let's move on to the next question. So this is the next question. This was your group exercise question that I that I wanted to do. This is quite a little more. So this one also covers periodic inventory system. So we'll just go through that just to make it clear. So first of all, let's look at what's required. So assuming the company, what's required is assuming the company uses the perpetual inventory system, calculate the cost of sales and the value of ending inventory using the first in, first out inventory valuation method, right? So let's do part A. Okay. So part A, JG Sports. So part A is FIFO, right? The FIFO, not just FIFO perpetual inventory. So there's when you use FIFO, there's a difference in FIFO when using the perpetual inventory system. There's a difference when using FIFO in the periodic inventory system. So that's very important. When you see the question first of all, you have to understand whether they're asking you to account for the inventory using the perpetual inventory system or the periodic inventory system. Once you know which system they're asking you to use, then you have to see which method, right? Because the FIFO method can vary between the two. Actually, I mean, the answer you will get will be the same, but the method is a bit different. The LIFO method, even the answer will be different between perpetual inventory system and between period. So you have to always make sure what the question is asking before you do it, right? So here they're asking us to do So the last question that we did, that was perpetual inventory system, not periodic. So here part A, we will be doing what we did in the last question for FIFO, right? So let's just copy this. Okay. Let's just copy it. Okay. So here we have on January 1st. Okay. We have 1st January. Okay. On 1st January, we have a beginning. We have a beginning inventory of 30. 30 into 95. How much is that? 30 95, that would be 2,850. Oh, sorry, not here. 2,850. Right? And then on March 9th, we made a purchase. You have to make sure you move it in the correct order, because see, sometimes they give you all the purchases together and then the sales together. But sometimes there's like this April 10th, of course, will come between these two. So you have to make sure you have the dates in order. So on 9th March, we make a purchase of 50 units at the cost of 90 ringgit. So that would be, how much would that be? 50 into 90, that would be 4,500, correct? So now the balance is, okay, on 9th March, on 9th March, the balance is, let's just, I'll sum this up just to, yeah, just to make it a little more clearer for you guys. On 9th March, this is our balance. Yeah. Okay. On 9th March, this is our balance, right? Now on April 10th, on 10 April, we make a sale of 42 units, right? So we sold 42 units. Okay. So now, based on what we did last question, how will these 42 be divided? So now we have two batches of products. One is costing 95, one is costing 90. So what should be done here? Can one of you answer? Sister Zakira, can you answer? Which one should, because we're using the first in first out method, right? So which one of these should we should remove first?
Like 57, 95.
Yeah, 39, but that is the older one, right? So we have to get rid of this first. So now we sold 42. So from those 42, 30 of those 42, we sell the we had before, the one that was costing 95. We sell that first, and then for the remaining 12, because left with the products costing 90, the remaining 12, we sell that sports product. So 90 into 12, how much is that? All right, that is 1,080. Right now, what is the end balance? Panata, could you answer what is remaining at 10th April? What is the balance remaining at 10th April? What is the balance remaining at 10th April?
You said so. 38. 38.
Yeah. So I this figure. So 38. 38 into how much is it? 38 into how?
90. 90.
All right. 90, which is 3,420. So the remaining at 10th of April, right? And then we have a purchase of this date is August 8th. So can you hear me? Me? Hello, are you guys able to hear me? Hello.
So I can hear you, but I think your connection is a bit poor. Yes, sir. I can hear you.
Hello, can you hear me?
Yes, sir.
Yes.
Yes, sir.
Hello.
Hello, yes, we can hear you.
Yep.
Okay, sorry, I'm having connection is not. All right. Can you see my screen?
Okay, yes.
Yep.
All right. Okay. 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 So let's continue from here. On August 20th, we made a purchase of 50 sports products, right? For a cost of 85. For a cost of 85. That would be 50 into 85. That would be 4,250, right? Okay. So what would be the balance for 20th August? We already have 38. We already have this remaining. So we add this, right? And then the balance, the total balance would be the sum of this. For 20th August, right? Then we have a sale on September 11th, right? So that is 11 September, right? 11 September, we have a sale of 60 sports products, right? Okay, so how should we divide it? Can one of you answer the 60 sports products? How should it be divided here? These are the two batches we have. We have 38, the old one of 90 ringgit cost, and we have 50 products at 85 ringgit cost. So these 60, how should we account for it on September 11th? This one. Can one of you answer? What are the entries that I should make?
38 from
38 into
20.
90. All right, and then the remaining 60, 22 into 85. Correct?
Yes.
All right. How much is that? 22 into 85. That is 1,870. And so what we have remaining is 20. This 38 is we have gotten rid of. From this we sold 50. So we have 28 remaining. 28 into 85. That would be 85 would be 2,380. So this is the ending at 11 September, right? Okay, so we have here. It's okay. Let's just continue. So next we have a purchase at November 15th. We have November 15th. We have a purchase of 60 into 60 into 80, correct? How much would that be? 60 into 80, that would be how much? How much would that be? If you guys have your calculator next to you, you can answer it soon as well. 4,800, correct? Yeah, 4,800. And now the ending balance would be, we already have these 28, and then we have this, and then we have the sum at is these two, right? So that is the ending balance. That is the ending balance for 15th November. This is the ending balance, 7,180. 28 of it is a cost of 85, 60 of it is costed at 80. And then we have the final sale at 23rd December, right? This sale is of 65. All right, can one of you answer this one? Sister Zakira, can you answer this one? We have 65. How will it be divided? How will the 65 be divided? These are the two batches we have. This is the old one. This is the new one. Yeah.
Is the old one?
The old one is this one, the 28. Then this one. And we just bought this. So we have to get rid of the old one first, right? So it would be 28 into 85, right? That is costed as 380. And then we have the remaining of the 65. So 65 minus 28 is 37. So 37 into 80. 37 into 80, it should be 2,960, right? And then what we have remaining is what we have remaining is 23. We had 6. This is completely we got rid of this. From this 60 we got rid of 37, so we have 23 remaining. So 23 into 80 equals 23 into 80 equals 1,840. You guys got that?
Yes.
All right. So the total cost of goods is this one, right? And the ending inventory is what we add is the remaining at 23rd December, which is 1,840. Was that clear? You guys all got that, right?
Yes.
All right. Okay. So that is, we've answered. We've done part A, right? So part B is assuming, so this is a bit different. Now, assuming the company uses a periodic inventory system, calculate the cost of sales and the value of the ending inventory using the weighted average inventory valuation method. All right. Okay. So here we have B, we have WAC, perpetual, right? Right, perpetual, right? So this is the format. So let me just copy this format so that it's easy. This is the format that is typically used. All right. So first we have to. So now we have first we have to look at the beginning purchase inventory value, right? So the beginning purchase inventory value. What is the beginning purchase inventory value for this question? What is the beginning purchase inventory value for this question? It's here. It's right here, right? How much is it? What is the beginning inventory value on January 1st?
Yes. 90.
30 into 95, correct?
Yes. Yes.
All right. So 30 into 95 is 2,800. So 30 into 95. That is why is this not? All right. 30 into 95, that is 2,850, right? And then we have the net cost of purchases. So these are the three purchases that we made. Right? So if we take the full cost of them, we have 50 into 90, right? Plus all the purchases plus 50 into 85, right? Plus 60 into 80. All right. Oh, so what is the full cost of purchases here? Can one of you solve it? I'm also doing it with. Wait a second, 15 to 90. $50 into 90.
15,550.
How much?
15,550.
13,550. Okay. 13,550. So that is the net cost of purchases, right? And then, so then now the cost of goods available for sale. So all the cost of goods available for sale is the sum of the above two. So sum of these two. Right? So these are the goods that are available for sale during the during the year, right? And now we have the, so this is where it will change. So whether we are doing FIFO, LIFO, or WAC method for perpetual for periodic. This is periodic, my bad. For periodic, right? For periodic inventory systems, this step will be the same. The beginning for this question, the beginning inventory is value the same, the cost of purchase is the same, and the cost of goods available for sale is the same, right? The difference is what we add here, right? So as you put in the explanation here, in the WAC method, the ending inventory will be calculated using the average cost per unit, right? So the average cost per unit, okay, the average cost per unit is the total cost for sale, right? This value, the average cost per unit, average cost per unit, equals 16,400 divided by the total available products for sale, which would be 60 plus 50 plus 50, right? Plus 30, which is 190, which would equal 86.3. So that is the that is the value that we need to take for the ending inventory, right? So this is the average cost per unit for the ending inventory. Now, how much ending inventory is remaining? So sales equals 60 plus 65, 42 plus 65 plus 60, right? This equals 167, right? This is the sales, 167. So the ending inventory, what is remaining is ending inventory equals 190 minus 167. So that would be 23, correct? So here the ending merchandise inventory value equals 23 into 86.3. How much would that be? 26 into, sorry, 23 into 86.3, which is 1985. You can take it as 1895. This would be minus is it, did you guys get that? Was it clear how this was done?
Yeah.
Can you repeat how you get sales? Sales.
How which one? Sales. Sales. I just wanted to find the, here we have the units sold here. So on April 10th we have 42 units sold, 60 on September 11th, and 65. So the total sales throughout the year is the sum of that. So 60 plus 65 plus 42 is 167, right? And the total products that we had available for sale was 190. 190 was the sum of this. 60 plus 50 plus 50, that is 160 plus 30, 190. So we had 190 and we sold 167. So the ending inventory is 23, 190 minus 167. And then the average cost per unit, like I said, is, so yeah, so you got that?
Okay. Yeah.
All right, so that, so you to get this value, you need to have the ending inventory. What is the ending inventory? Here the ending inventory was 23 units, and then the average cost per unit was 86.3. So once you do that, you get the, and then yeah, you just minus. So this is the cost of this is the cost of sales. This is what they wanted to, yeah, they want this. The question wanted this, and they wanted this. So this is the relevant answer. All right. Is that clear? Was part B clear?
Yeah.
Okay. All right. Okay. Let's remove. For this one, let me just take this. Right. And then part C. Yeah, part C is revenue. So calculate the revenue and gross profit for the company ended. Okay, so let's just, yeah. Here we don't have this. Okay, so here the sales, once again, the sales, we just have to multiply, multiply this. So we have 42 into 220, right? Plus 60 into 117. We just have to multiply. We just have to add the sales. 65 into 115. So that is this is the total sales. 23,735. For the FIFO, the cost of sales was 14,560. 14,560. And for the WAC, what we did was 14,415. So the profit, so this would be the, so this is the revenue. Okay, we can change revenue. And let's make this gross profit just to, yeah. Is that clear? How that was done? That's clear, right? I think that it should not be difficult. You guys got that? Hello?
Yes.
All right. Okay. Okay, so that was part C. All right. And then in D, okay, D, it was discovered that all the units of the ending inventory that was remaining at the end of December 2019 was slightly damaged. Hence, the net realizable value of the unsold units was only 60 ringgits. What would be the value of the ending inventory under FIFO method and the weighted average method, taking into consideration this damaged inventory? Okay. All right. Just. Okay, so part D. Okay. Just a moment. All right. So our now currently in the question for FIFO, our ending inventory, we had 23 into 80, right? So we had, this was our ending inventory, 23 into 80, right? Cancel that. This was our ending inventory, 23 into 80. And for the WAC, it was 23 into 86.3. 23 into 86.3. 23 into 86.3, which is 9,805. So this was the ending inventory for WAC, and that was the ending inventory. This is what we already have. Now they're telling us that so over here, all 23, the cost of it is 80. Over here, all 23, the cost of it is 86.3. Now they're telling us that the net realizable value of the unsold units was 60 ringgit. So what would the net realizable value now? What would be, considering the net realizable value is 60? What would be the value of of ending inventory? We have to take the lower of the two, right? Because the ending inventory is 60 ringgit, and the cost for under FIFO and the WAC is higher, we have to take the lower of the two. And so actual would be 60. How much would that be? 23,380. Is that clear? Because
Yeah.
the NRV of the ending inventory that they've asked to explain, right? On the ending inventory is lower than the cost of the inventory under FIFO and WAC. That the NRV yeah, all right, is that clear? Is that clear?
NRV stands for what?
NRV is net realizable value.
Okay.
Net realizable value is basically the market value. So now they have, let's say they bought the inventory for 100 ringgit, but now that value, if they want to just dispose of it or give it away quickly, the value of it right now in the market is maybe 80 ringgit. So sometimes that is the market value. So once these products that they had, they got a bit damaged, it was worth only 60 ringgit. And so we have to adjust, right? So Yeah, so now actually we have to make the adjusting entries, right? So like in the previous question, we made adjusting entries. So over here, so under FIFO, the decrease is 1840 minus 1380. Over here for the WAC decreases 1985, right? So how much would this be? 1840 minus 1380, which is 460. This is the decrease. And over here, the decrease is 605. And so here we would, so once again, because it decreased, so what do we debit, what do we credit? We did this in the last question. The inventory is decreasing. So do we debit or credit inventory? The value of the inventory. Hello.
Yes, yes.
The inventory value is decreasing here. So how do we debit or credit inventory?
Credit.
Credit, right? So we
Yes,
credit
sir.
inventory and we debit cost of goods. So under both ways. So this is basically the answer that they're looking for question D. So the explanation is because the NRV of the inventory is lower than the cost of the inventory under FIFO and WAC, then NRV is used to value the ending inventory. Right? So yeah, is that clear? Is everything regarding this question? I think this is the most difficult question possible for this topic, which is why I want to do it. Is this clear? Do you guys? Is there any?
Yes.
Yeah. Do you have any questions, Sister Zakira?
Yeah.
All right. Okay. So if everything is clear, then that can be the class for today. I think it would be really great if you guys could do practice this. So I have uploaded this. So I have uploaded 3 documents, right? So in this document, there are 2 questions here that I did not do either one, right? And in the extra topic 5 inventories questions, question 1 I haven't done. I did question 2, right? So if you can do this question and then the 2 questions here and test yourselves, that would be great. If you have any problems, any issues, I can help you out, right? And then of course the group exercise question I did today as well. So I will upload the recording as well as the Excel inshallah online to our Google Classroom. And if you have any questions or doubts, please let me know. All right.
Yes. Can I ask you for one last thing?
Yeah.
I just have a doubt regarding what do you mean by physical stock take or
What do I mean by what?
uh, physical stock take
Physical testing.
stock take physical stock take because there's this
Can you?
question. Yes.
And physical stock
Yes.
trade.
Take as in Take take physical stock take. Or I may send the question.
Okay, can you type it out? I don't know why it's very unclear.
Okay.
physical stock take. Wait, let me. I'm not sure. Let me just Google this and see. Maybe I can. Yeah. Okay. Physical. Yeah. Physical. It's inventory count. You mean? Yeah. So, like I said, for example, under Fifo and under Lifo, and the physical stock, that stock take is a bit different, right? Because over here, for example, Fifo, you get rid of the older ones first. Under Lifo, older stock first. Under Lifo, you get rid of the newer stock first. Under WAC, it's just you just average it and everything is the same. So I think that's what you mean by physical stock take. I think that's the only explanation that I can really give. Yeah. Where did you hear this term anyway?
From my professor in accounting 1101. Yes, but I may check the question that she gave us.
Yeah. Share. Can you share the question on WhatsApp? If you have it, I'll just take a quick look at it before we wrap up the class.
Yeah. Okay.
You guys can see my screen, right? Hello?
Yeah.
All right. So
Question letter D. Upon conducting a physical stock take.
okay. So upon physical stock take, basically it means that they counted the inventory. You understand? They counted the inventory, and the remaining inventory is 130 units. You get it? Now, when it comes to why is it relevant here, right? So the reason why it's relevant is that they have asked you to solve using a periodic inventory system. So as I showed you with this question, for periodic inventory system, you need three things. You need to have the beginning inventory value. You need to have the cost of all the purchases during the year, and you need to have the ending inventory value, right? So they are telling you that when after conducting the physical, I'm done this 2 minutes. So the question is telling you that upon conducting the physical stock take, right, at the end of the year, there's 130 units. Right? So this is the ending inventory. Physical stock take, it means an inventory count, right? So in this question, so for part D, you have the ending inventory. You would have the beginning inventory from the rest of the question, and then you can also, like, as you can see here, the purchase. You can also sum up the purchase value, and then you can find the you can use it to find the cost of sales. Understand?
So one last question. Is periodic inventory system only applicable to weighted average method? I'm sorry.
I'm sorry. Can you repeat your question?
Is weighted average, periodic inventory system only applicable to weighted average cost method? Or
No, periodic inventory. Periodic has all three. It has FIFO, it has LIFO, and it has WAC, right? So, for example, this question now, like I'll share this. The explanation here that I shared here for using periodic inventory. When you're using FIFO, the ending inventory will be calculated using the newest items in the inventory. Okay, and for LIFO, ending inventory will be calculated using the oldest items in the inventory. So let me apply that and show you. So in this question, right? In this question, like I said, when you're using when you're using the periodic inventory system, the beginning value, the cost of purchases will remain the same, and that will not change for any method, right? The only thing that will change is the ending inventory. So over here, we have done what? We have done the weighted average cost. So let's say they told us to use the FIFO method, right? So for FIFO method, we know the ending inventory is 23, but the cost as we calculate using the newest item inventory. So the newest items in the inventory, right? The newest items in the inventory is the latest purchase, which is which is here, which was cost at 80, right? So the newest items in the inventory cost 80. So here, if we had been asked to do the periodic inventory system using the FIFO method, instead of multiplying this by 86.3, you would multiply it by 80, and thus you would get how much you'd get. You would get 23 into 80. What is that? 23 into 80. That would be 1,840. So this would be the answer if they had asked you to calculate the cost of sales using the FIFO method. If they asked you to use using the LIFO method, and the ending inventory value, you would take the 23 multiplied by, you would say cost of the oldest inventory. The oldest inventory is what? 95. So then it would be 95, which would be 23 into 95, which would be 2,185. So this would be the answer if you're taking, if they ask you to do the periodic inventory system with the LIFO method. The one I showed you previously was FIFO method, and the one we did originally was the method. That's the only difference between these three. Is that clear?
Yes, yes.
All right. So for FIFO, the beginning value and the cost of purchase, of course, would remain the same. The difference is in the valuing of the ending inventory. If you're using the FIFO method, you take the latest product cost. If you're taking LIFO, you take the earliest product cost, and if you're doing the WAC method, you just have to take an average, right? That's clear, right?
Yes, yes. Alhamdulillah. It's clear.
All right. Okay. All right. Okay. Sorry. So yeah. Okay. Any other questions before we wrap up? Sister Zakira, you have any other questions? Okay, no. All right, so then I think we can wrap up this class. I would appreciate if you guys could try out the extra questions that I have shared. That's better for you, and I can also help you out if you have any doubts. If you don't, well, that's up to you really. So yeah, Jazakallah khairan for attending today's class, and I'll upload the recording later on, inshallah, along with the Excel file. All right. All right. Assalamu alaikum, Zak. Assalamu alaikum.
Alaikum assalam wa rahmatullah. Jazakumullah khairan. Barakallahu feekum.
Thank you, brother.
All right, no problem.